Sure. I'm going to talk about the Russian invasion and the global economy. We're entering a period, a transition period for the global economy. At ARS, our last investment outlook, which we wrote on beginning of April, was entitled "Everything's Changed." And I think the Russian invasion really did change how the global economy is going to operate going forward, how politics inside countries is going to change, how geopolitical outlook is going to change. So I want to touch on that. But the war, growth, slowing growth, rising inflation, and increasing recession fears are really weighing on investor sentiment. I think the University of Michigan Consumer Confidence Survey is at a lower than it was in 2008, and it's lower than it was in 80 and 81. So the mood is pretty dark all over. And as you add in some of the things like the Supreme Court ruling and other things that have come out lately, you can start to see a system that is really under a lot of strain and fraying. And when you throw economic problems on top of social and political problems, it creates a difficult environment. So today I really want to talk about the Russian invasion, its impact on growth and inflation, sanctions in their recent debt default, and how Russia's been managing that, and what it might look like longer term.
Sorry, Stephen, that was
It's okay.
me.
I think I'm still muted though.
No, you're good.
Okay. And I want to share some random thoughts about the U.S. Growth, politics, and investing. So let's jump right into it. So when the war started, before the war started on February 18th, this is from the Dallas Fed. The Dallas Fed uses consensus economics, which is basically the U.S. and 36 of its largest trading partners, which represents about over 80% of global GDP and purchasing power parity. So it's a good indicator of really global economic activity. So from February 18th, before the war started, to May 6th, that came down 1%, while inflation jumped almost 2.5% or 2.3%. So a big shift. Next year's growth slowed a little bit, not much, but inflation, again, in their views, jumped 1%. This speaks to some of the strains that the oil and food inflation from the Russian invasion has really created, but also some of the disruptions that have come on the global system. Another look at this is the shifts from the war in Ukraine and what it's doing in advanced economies in the red. The top is the revision in percentage points, and the bottom is the 23 revision in percentage points on CPI. So you can see that definitely overall moving up in most cases, and not a great picture that's being created. What I would point out is the emerging economies are really taking it on the chin from this war, and they're kind of between a rock and a hard place right now, putting a lot of strains on them as the dollar strengthens. It's not only hurting some of the European economies, as we talked about, but commodities trade in dollars. So a stronger dollar raises the cost of commodities for people buying that in dollars. So a lot of challenges coming out of the war. The other thing I just point out is we were looking at higher inflation this year than last year, but certainly this chart speaks to how much the war is impacting what's going on today in terms of the inflationary pressures. So I think when you're seeing the slowing growth, though, on the other side, that actually speaks to what's coming ahead in terms of wage pressures, jobs, and other things. So really a mixed picture in terms of not a very positive outlook. But I think the slowing growth leads to slower inflation, and that will actually start to ease some of the pressures. But we're going to go through one of those painful economic transitions that you have to go through, undetermined whether it's going to be shallow or deep, because you don't know what the outcome is from the war. And so much of what's going on right now depends on, are we going to continue to have a food and energy crisis in Europe and in many of the emerging economies? Ironically, in this, the US actually sits in a better spot than most nations do coming out of this, because we are pretty energy and food self-sufficient in that way. But this is really a big challenge that we're facing. And a lot of it comes out of not just the invasion, but the sanctions that the West used to try and stop the war. So when the war started, we put some of the most aggressive sanctions that have been put on a nation in history. They went way further than I think even the Russians anticipated, but Russia responded quite well from an economic perspective and how they've managed this to date. I don't think this is a sustainable issue, but as you can see, the ruble went from 80 to 100, now back up to above where it was pre-war, because they did do some things to manage the economy. And this was designed to push them towards financial collapse, or certainly make it impossible to not fund the war. What we found, though, is that like-minded nations and people in need of Russia's oil and food have stepped up, whether it's China, India, or other like-minded nations. In India's case, it's really a need for their own internal economy. But this is a challenge that Russia so far has navigated. Their ruble moves pretty well against the sanctions, but they did it because they learned lessons from Crimea in 2014. So this chart shows 4 different areas. It shows their current account, which is net capital outflows, their gross capital outflows that are not reserves, their reserve outflows, and their gross capital inflows. And what they learned from 2015 is 2014 and 15 is you actually have to be decisive and act swiftly. And they did that. And what you're seeing that's a little different now is they're stopping the capital outflows. Their access to their foreign reserves has been cut in half because of the sanctions. And there's not many inflows coming in because of the sanctions. So they've really gone to a self-sufficient approach. And one of the ways they did that, again, lessons from Crimea, was they spiked up rates pretty quickly, slow things down, put capital controls on, and that was what they did in 15. They did again this time. In 15, they raised rates about 11.5%. This time they raised them about 10.5%, but that has actually really put a crimp on money flowing out and helped them take these aggressive steps, did help them mitigate the issues so far. But they have an issue that they've been pushed into a default. It's not that they didn't have the 100 million to pay. They couldn't pay it in rubles, so they couldn't make the transactions. But you can see that when their bonds are selling for cents on the dollar, that's not a great setup here. They did make a $400 million payment last Thursday, so it's not as if they don't have the cash. They don't have the cash to be able to transact in dollars or outside the ruble, and that's putting some strains on them. But as we look at it today, you're in a spot where the game's changed, and the game's changed because Russia has figured out, working with people like China who are worried about sanctions potentially coming their way if they invaded Taiwan, a playbook for navigating a sanctions, which, if it goes on, will push the world into the trading blocks and security blocks that I've talked about on previous calls since the invasion. So not a great situation for Russia. One of the other things I would say that I think is a real issue, and Adam, you asked this question earlier, what is going to work with the sanctions and how's the pain really going to be felt? And I think it's really going to be felt because they're not going to have access to the technologies that they need to really run their country over the longer term. Russia's not a big producer of semiconductor chips and the like. So getting access to the latest technologies, and the more that drags on, the further and further they fall behind, that becomes a choke point, because if you can't get the supplies you need, you can't run your economy that way. And I think that's one of the strains that is coming. There's only so far they can go to use the tricks that their finance minister has used to delay what looks like an inevitable, really difficult longer-term economic problem for Russia. So I want to switch gears for a minute and talk about random thoughts, and they are truly random. I touched on this last week, that layoffs and hiring freezes are on the rise. Again, from last week to this week, there have been 10 new announcements of companies doing layoffs or freezes. I think that's changing the dynamics of the wage inflation that concerns that are out there as power shifts from is shifting in some cases, not fully from labor back to the corporations. I think as the economy gets tougher, corporations will be able to demand more of their employees. And you're going to start to see that power shift that started to go and people were expecting was going to continue on to reverse back. Inflation expectations are coming down considerably. We have really high quality companies that are sitting on buildup of inventories that are way above. So they're starting to cut prices and you're starting to see price reductions that will move units to get their inventories down. But I think that's a big issue. I think war and inflation are absolutely changing politics, but politics is also changing politics. And I think the Roe v. Wade issue is going to have big implications for the midterms, and it actually may help save what looked like and may still be a slaughter for the Democrats in the House and possibly even the Senate in the midterms. And one of the strategists we follow closely, who's gotten it really right, felt that this could be a historic route for the Democrats. I'm not sure that Roe v. Wade doesn't change that quite a bit and shift some of it back, but you are seeing some really interesting politics going on because of the migration patterns that came out of COVID, where you have Democratic leaning people moving to red states and vice versa. And you're starting to see shifts coming that are changing what matters to people. And I think if you want to beat a Democratic candidate, you say three things right now. And this is what the pollsters are saying. The Democrats' Achilles heels are Joe Biden, crime, and inflation. And that's going to be what the Republicans are going to be hammering home on is, look what happened under Joe Biden. We're not in a good spot. We're not responding well. We're not doing this. We're not doing that. From the Democratic side, they're going to blame the Republicans as Trump and the Republicans shifted the Supreme Court. They're going to say that we ended up with Roe v. Wade because of overturn, because of the shifts. So that is creating some really interesting dynamics in domestic politics that I think the midterms are really going to be a fascinating thing to watch. And Mark, I don't have it confirmed yet, but I think right after the midterm elections, we'll be able to invite everyone onto a call with pollster Frank Luntz, where he's going to be interviewed by Miles Nadal from our parent company. And it'll be a pretty fascinating discussion right after that. So we'll more to come on that in October. Awesome. I think the field for the presidency is going to be fascinating right now as you look at both sides and who's lining up. I'll do the Republican side because it's a little easier to start with. You have Trump looking to get back in, but I think he'll only go if he, one, believes he can win, and two, that he gets past the June 6th hearing, the January 6th hearings in an okay state, which is questionable right now. But he is also running even in New Hampshire right now with DeSantis, which is interesting. And then you have somebody like a Cruz in the background also, but that looks like the early stage for the Republican field. They're going to wait and see where Trump lays out before you get other people coming out. On the Democratic side, it's fascinating because you're seeing whether Biden can run for another term, whether people think he can win or whether he's physically able to do it or whether the Democratic Party wants him to do it. There's going to be fascinating things there. The view of Harris is one that is she the candidate that the Democrats would want to turn to is questionable right now. So then who do you look at after that? In the cabinets, you have people like Pete Buttigieg and Gina Raimondo, interesting candidates in commerce and how that's playing out, transportation and commerce. I think in that you'll have some slate from the progressive side, but don't lose sight of the fact that Hillary is back out making speeches on a regular basis right now, talking about the decaying of democracy and the need to get back on track, which I believe are part of her campaigning to say, you need me to come back into the fold. It's going to be a fascinating couple of years in US politics, not necessarily good, but fascinating. So I think that's something we want to watch. come from an investment perspective, I think the big issue is right now with all the uncertainty that's out there. And I believe we're starting to see some of the inflationary pressures starting to ease. I think you'll see that coming through over the next couple months. It wouldn't surprise me if one of the inflation prints over the next couple months is a big surprise. That's a negative surprise that inflation is easing faster than people think. That's going to put the Fed in a bit of a quandary on how they manage things. But I think you want to focus on investing in quality and investing in the secular themes that we've talked about: digitalization, electrification, healthcare, food, energy, are all the things that are going to be on people's minds. But we've had a dramatic move and reset in pricing and valuations over the last period. And we share Howard Marks' view that there are opportunities, and you want to be buying selectively now because they don't ring the bell when there's a bottom put in. And you usually, the stuff you most want to buy, you can't get to. And I would just say the quality is on sale right now. We're taking advantage of ARS. We still have higher cash positions than we normally would, because we don't think you can see clear where you want to be, and there might be more downside. We think the downside in the equity markets will likely continue, not counting this relief rally that we're going through right now from oversold conditions, until you have better clarity on when does the Fed when does inflation start to peak, and when is the Fed able to ease off the pedal. So I think you're going to have to still be cautious, but you want to be able to take advantage of some of the quality that has come in as much as it has in the last couple months, and take advantage of that and start to build your positions for when we come out on the other side. Whether it's 6 to 9 months out is not knowable, but because you don't know what the outcome is in the war in Russia. But I think there are opportunities. And I think if you're too conservative right now and too afraid to move, you're going to miss out. And when the bell rings, market's going to move really fast. You're not going to be able to catch up. And a lot of the values opportunities will be mitigated or gone, and your margin of safety will be taken out then. So we're very cautiously optimistic about the environment. We think the way to invest now is to look past the near term, invest for the next 12, 18 to 36 months. And by buying the things that where areas where capital will have to flow in this environment. And the last thought I'd leave you with, and I don't know if you saw Kathy Woods this morning, but she had a line that I think is really important to keep in mind. Innovation is the antidote to the problems that exist today. And the more that goes into innovation, if you're investing in innovation, and why we keep on the secular themes, the better off you'll be, and the margin of safety will rise for you. So I'm going to stop there, Mark, and open up for discussion.
Interesting to hear that from her. But questions, comments?
Stephen is wondering, just curious, you've mentioned Trump getting all those January 6th hearings,
Roger,
I guess.
You have really bad audio.
Oh.
Maybe put your question in the chat.
Okay, no worries.
We'll honor his question from the chat. Other questions, comments?
Hey, Stephen, you had talked about the Republican candidates. Any mention of Suarez or Haley? Down here in Miami, there's a significant preference to Suarez over DeSantis as being the choice.
Yeah, I think they're only really focusing right now on whether Trump is going to be the guy or not. I think is really the issue, because
Touché.
I think that's really it in a nutshell. He'll come back in and say, look how much better off we were when I was there. I don't sure he'll get the wide agreement that he had the last time for it, but I do think I do think as you get a year out, you'll see the real candidates, and you'll see some surprise names that nobody's talking about. And I think that's when you'll see some of those changes where you'll really get a better sense. But Suarez wouldn't surprise me, because he does have quite a following.
Hey, Stephen, I'll throw one out there. I I cannot believe we're going to put another 70-something person in that office. I mean, I don't know whether it's going to be a Republican or a Democrat, but it just seems to me who's going to vote for one of these old geeks? No disrespect to anybody. I'll be one someday, but it just,
All
I
right,
gotta believe I gotta believe the population's just going to vote for somebody younger.
Yeah, it'll be interesting to see. It's too soon to know, but I do think I think the bigger issue is, do we go back? Could we possibly, and I think it's a possibility, I mentioned this to Mark and some others several months ago, that we could see Trump against Hillary again.
Oh my God.
we were having like, that was a December dinner
Yep,
with Jack Wyant, at the Union Club.
and Peter Borish.
Peter Boris was, who would come to our lunch on Thursday, but he's his foot's in a boot. But he'll hopefully be, he hopefully will be in Michigan.
So,
Stephen, on that note regarding the generational change, following up what Duncan just articulated, which he's absolutely right. Are you seeing any younger generation, new generation, and I'm not talking about DeSantis, yeah, but younger, really vibrant, coming out of either party as potential?
I think Buttigieg was not in a good spot when he ran the last time because of what happened in South Bend and how he handled the meeting with the Black Lives Matter crowd after the shooting there, and he didn't handle that particularly well. And so I think he might be one of the ones that represents that younger generation.
What do you think about this person we met in Ohio?
Well, I think Jack said that that's not going to happen until 2028. Is that right, Jack? For the mayor? of
Now,
Ohio?
right now, in this moment, when we have all of these
This is the mayor of Cincinnati.
federal dollars, placing those bets is really, really challenging and really, really terrifying.
He's age 40. So you can slot him in at 46 to 48, somewhere in there.
Perfect. Let's go.
I do think, Duncan, you bring up a good point, though, because I think the current state of politics is so disenfranchising for the young people that they're going to want massive change. But at the same time, I don't think a lot of areas want the change that goes all the way to either extreme. And I think that you're seeing some really interesting things in the Pacific Northwest right now, where there's a lot of backlash towards the defund the police, and the crime issues, the homelessness issues are really changing the views. And you actually have, I think, 6 counties or 8 counties in Eastern Oregon that want to become part of Idaho.
Hey, Steve.
Give you a sense of how the map's changing.
Hey, Steve and Mark.
Last question. We got to move on to health tech, but go ahead.
This is Rob, and then I want to also just take a moment for, I think, Roger's question. I'm actually on the way to DC, and Steve, did you bring up, with respect to the vice president, did you bring up sort of her, her interest or what's developing there in your remarks? And then secondly, Mark, to your credit, I'm actually going to Select USA events today, which includes, the Commerce Department, but Ohio, Michigan, and Florida are all hosting receptions today in as part of that. So, you're kind of hitting a good trifecta there.
We'll be back in Florida for pickleball and all the rest. Michigan is October, and we might even hit Cleveland again. Well, look, we want to.